Hey everybody, what's going on? Welcome back to Third Wave Trades. All right, guys, today I got two stocks for you guys that both have earnings this week. Nio, which has their earnings on Friday, I believe, in the pre-market in the AM, and GameStop, GME, which has their earnings today after hours. All right, so I'm gonna keep these videos really quick. Uh, and just kind of show you guys where I see them in terms of their wave counts and whether or not I think that they would be a good play for earnings. All right, guys. So before we get started, quick disclaimer: I am not a financial advisor, and this is not financial advice. Please do your own due diligence and research, and/or consult with a financial advisor before making any trading or investment decisions. Secondly, guys, if you could, please hit the like button down below if you guys find the content useful, and please subscribe to the channel to get more Elliott wave breakdowns on your favorite stocks, cryptos, and commodities. Alright, guys, so let's start off first with Nio, and I'll start off by giving you guys a macro count of what I think the where I think the stock is currently. And now this is going all the way back to 2019. You guys can see we had a 5-wave move to the upside in this macro count: 1, 2, 3, 4, 5, and that was our larger first wave, right? And then we had basically a long correction starting in January of 2021 after we peaked at around $65, $66, and we had this complex A, B, C correction playing out. Now, it's not clear yet if the C wave is completely done, but it's definitely in a territory where it should be finishing up if it's not done already. And I'm going to show you guys what I mean by that. So there's a couple of ways that we can look at this correction. First off, in terms of measuring it, there's the standard just Fibonacci retracement, right? So if we see the retracement of this entire first wave up, you guys can see that basically we are past the 61.8%, which is a common level for a second wave retracement, 78.6, which is another common level, and then 88.8, right? So now that's another, and we're just below that area. So we're definitely in an area where we can bounce from here. Now, technically, the second wave can go as far as like 99% retracement, right? The only thing that it cannot do is it just cannot completely pass like 100% of the origin point, right? So this would be our point of invalidation, the $10 mark, because that's where the move started. So if we pass that, then this whole thing is invalidated. Up until that point, it could literally come to like $1.50, and we can still bounce from there, right? Right. So that's one marker. Now, the other way that we can see that this looks like it's pretty close to completion, if not completed already, is the if we use our fib extension tool and we measure the lengths of wave A and wave C. So usually C will be a 1-to-1, or it'll fall in this pocket right here, which is the 1.236 to the 1.382 percent, right? So basically wave C has extended to a good range, right? It could still come down a little bit lower, but it is in a good area for where it can bounce. And finally, guys, if we just do the count itself, to me it looks like a textbook zigzag type of pattern, right? So let me put this on a daily chart so we could see it a little bit more clearer. You can easily count 1, 2, 3, 4, 5 waves for A, and you can count this as a clear 3-wave B move, and then you can count another 5 waves over here for wave C, and each one of these waves look like they have the proper waves within them to be impulse waves, right? Waves A and C. So it looks like that it's in a good area for the stock to bounce. Now, the the question is whether or not we will see that bounce or not, right? In terms of other things, you guys can see that on the daily, we are under the 21-day EMA. We are under the 50 and under the 200. So that's not, that's not bullish at all. In other words, we haven't gotten the reversal yet. We would basically be anticipating a reversal, and that's not good trading in my opinion, right? Um, we want to not be predictive. We want to be reactive. So when we see that the reversal has happened, that's when we should time our entry, right? Because, like I said, if this is in fact a first wave and a second wave on a macro count, we would be expecting at some point when the reversal happens for a third wave move to start, right? Um, so that would give us a great trading opportunity once we do get this bounce to go long. Now, we just want to time our entry so this way we get in at the best price available. This green box that I have drawn down here, it looks like it could potentially provide that, right? So again, we could bounce from here. Maybe the earnings can be the catalyst if they come out really good, or if there's a good, better than expected outlook, or whatever the case is, we can get that bounce. If we end up going lower, I think that this highlighted box that I have would be a great area for us to see the reversal happen, which is basically just looks like it's the demand zone. There would be like a large demand over here for when we actually got uh, the price to start its major impulsive move the last time up. So if we do go lower, I would be looking at a range between $2 and $4. Within that range, I think would be a good buy zone if we go lower. Now, if the earnings come out great, like I said, and we bounce, then what is the? I still would not play the earnings for either side because it would really just be a gamble at that point. But let's say the earnings does come out good and the price actually goes up. What we're gonna want to see then, if before we go long, is for price to come out and take out uh, this previous peak, because then at that point we would be looking to do a series of higher highs and higher lows, which will basically be a trend reversal, right? So as of right now, we're still doing lower highs, lower lows. Um, Once we take out this peak and we break that high, and then we make a higher low, and then take out these successive peaks, then we can know that the trend has been reversed. All right. So that would be a good time to then consider going long. And in that case, we know that basically we will get a 5 wave rally. So from, expecting a 5 wave rally, we could wait to get in at this point right here. Once we come back and break this, once we, break this high over here for the end of the first wave, there'll be multiple opportunities that will be safe areas for us to get in and to go long on Nio, but we want to see the bounce first. So I'm going to be watching Nio's earnings just to see which way they go. If they go lower, I'm going to be looking for the bullish reversal within this $2 to $4 range. If they go higher, I'm going to keep my eye on it to see if they can break this previous peak. And if I can spot the bullish reversal, and then try to time an entry for a second wave uh, low, so I can ride the third wave move up. All right. So either way, I don't think that it's necessarily a great play just yet to trade earnings. Unless you're uh, doing some kind of like low risk, high reward YOLO or something like that. Um, you know, I just don't feel like there's confirmation either way, right? Now, like I said, it's showing all the signs that it could be done with this correction because it's in a great area in terms of the retracement. I can count 5 waves, I can count the completed A, B, C, but just having that is not enough to make a solid trade. It's not enough for a solid trade setup. So I'm gonna want to wait to see more, see how the earnings comes out before I play Nio. Really quick with GameStop. GameStop, guys, obviously you guys know what has happened with this stock since back in like 2000 and was it 20 or 21, where we had the crazy meme mania led by GameStop and AMC and all those stocks, and GameStop was like the true originator, right? Now, since that massive rally that we had in 2021, the stock has been like really all over the place. And in terms of a wave count, it's extremely difficult to try to make sense of all of this, right? So this, you know, I don't think that, to me, this makes sense in terms of a wave count at all. All of this that we see right here, so all of this that we see right here could be some like really complex correction, like some sort of like uh, double like double three XYZX, like it's very complicated, and I'm not even going to bother trying to go into that right now, because I don't think it's necessarily that important, because what I see over here actually looks pretty promising, right? I'll try to analyze that macro correction later, but if we take a look at what happened over here, right, it looks like this is a possibility for a new bullish impulsive move to the upside. And what do I mean by that is that it looks like we have a leading diagonal. So back over here in January of 23, which by the way is when a lot of these bullish reversals kind of started happening, we got a bounce at $15 and we went higher all the way to $24. Then we came back, and over here, this is what's important, is that we made a higher low. We did not end up breaking below this. So that to me shows that this could potentially be a second wave. Now, this wave right here was our last earnings with GameStop, and you guys can see how we basically just gapped up really hard and the stock ran. All right, so that could be our third wave. Then we got a fourth wave, again, another higher low. And now we are in the, since then we've been moving higher again. So essentially this is very similar to, if you guys recall my Shopify video, it's a very similar structure, right? We're basically in a leading diagonal of a stronger move is what it looks like, right? So you have your first wave, second wave, third wave, fourth wave, and then fifth waves are usually the most impulsive moves in a leading diagonal as opposed to a third wave. Now this one is already ran so much. You guys can see right now this is already at $25 because we have earnings later today, so there's a little bit of that FOMO kicking in, possibly people anticipating good earnings, maybe because of the last earnings, whatever the reason, but we've already ran up. Now, in terms of a price target for when we get these leading diagonals, as I've mentioned to you guys in previous videos, if this is in fact a leading diagonal, which it looks like it is, the price must at least come to the high of the third wave. And you guys can see we're really close to that already, right? But that's really the only guarantee that there is. So that's why I'm saying it's probably not worth it overall to play this now, because price can hit that $26, right, this previous high, and then from there it can drop again. Usually it will pass it a little bit, right? But and sometimes people use this as a target, the top of the channel, but the price does not have to reach that. It can overshoot it, it can undershoot it. It doesn't have to necessarily reach that. What it has to reach is this third wave target. So if we were still somewhere down here, I would tell you guys, I think there's a very high probability that earnings is going to come out good, and we are going to reach $26. But since we're already so close to there already, I don't really see any value in playing it. Now it could run up to $30. There's other targets that maybe we could take a look at, possibly the $27 target from this peak, and 28 over here. But I think ultimately it's there's not that much upside in it. Now, what it this is another one where I'm going to keep my eye on it, because if it does come out positive and we do push higher, right? Um, at that point, I will basically be waiting to see what happens after that. Because if it were to top out somewhere within this range, right, we would have a completed leading diagonal, and then from there, what I would expect is a retracement, right, like an ABC, and then we will move a lot higher. That would be our third wave move, right? So this leading diagonal would be our first wave. We would get a completed, we would get a correction for a second wave retracement, and depending where this comes down to, that would be an entry point to play a third wave move for GameStop. All right, so again, you guys could play this one for earnings. I do think that it is a leading diagonal, so I do think earnings will come out positive. How high it'll go, I mean, that I can't determine. I think will definitely reach this third wave target, which is like $26 and almost $27. But how much higher it can go after that, it's a huge range, right? It can go from 27 to the top of this channel, which is like around $30, somewhere in between, right? Before we start to get a correction, it could even overshoot this target, by the way, guys. So I'm personally not going to be trading this earnings play. It's another one of those things, like if you guys can find this sort of high risk, a low risk, high reward type of YOLO situation, you guys want to play it. That's up to you guys. But in terms of a high probability trade setup, this isn't that. If we had caught it earlier, and I haven't had GameStop on my radar. I haven't really been watching it because I'm watching so many other stocks. But it was kind of like brought up to my attention. Somebody asked me to take a look at it, and I took a look at it, and I do see this leading diagonal setup. So if we were down here, I would have told you guys to play it, in my opinion, because I do think that we would reach this target of $27, and you guys can see like that's really where it's headed. So after that, there's definitely room for it to run, maybe another $3-4, but I'll leave that up to you guys. All right, I'm gonna keep this now on my radar for after earnings, after it runs. Try to keep an eye on the corrective move, so this way I can time an entry when the correction is complete, and try to go long from this area, somewhere over here, wherever the correction ends at, right? Because then I think that we will be getting a larger third wave move. So I just wanted to bring that up to you guys. Hopefully that helps in making your trades. Just a little bit of extra information from the Elliott wave perspective, what I see. And if you guys find the content useful, please leave a like, and please subscribe to the channel if you guys want more Elliott wave breakdowns on your favorite stocks, cryptos, and commodities. Peace.